Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain, and for now, the Nifty is holding on to the mark of 23,500. So there's a bit of a green on the screen, even though we're off the highest point of the trading session. Having said that, the mid cap and the small cap indices are powering ahead, so there is an outperformance coming in from those. The Bank Nifty, however, has given up gains, so it's still trading mildly in the green, but from the highs of the trading session, it's off almost 100 points, and in fact just around the flat line as we speak for the Bank Nifty right now. India VIX, that's managed to surge quite substantially on an intraday basis. So India VIX is up almost 7%. It's past the level of 14, and that tells you that there is that added volatility in the markets right now. This is the week of monthly expiry as well for the Nifty, plus the fact that the Parliament session is underway, and we are expecting the bond inclusion as well as a lot of IPOs this week. All of that is something the market is watching out for. For now, the holding companies are clearly a buzz. So whether it's a Bajaj Holdings, a Bombay Burma, all of these names are actually quite active. So even Pilani, etc., all of those names will come up for you on the screen, up anywhere in double digits. Astral, that's one stock that has done very well for itself in the week gone by. This week as well, it's continuing the up move. So if you pull up the one week chart rather, you will see that that stock in the last 3 to 4 trading session has managed to deliver quite a bit of gain for itself. MFIs are coming under pressure. Remember, Ujjivan Small Finance Bank cut its guidance, plus talked about stress in certain geographies. That's having an impact. Plus, the entire loan waiver happening from Telangana is also something that is not auguring well. Metals have also taken a knock, so call it the impact of the quant mutual fund holdings, the likes of Nalco, Seal, etc., or the overall sector. Nifty Metal is on the back foot today, so seeing some pressure there. But let's discuss markets and more with our guests on the show, Kunal Bothra as well as Naresh Purani, as always, on the show with us. Kunal, let me begin by asking you, seems like there is a bit of a roadblock per se around that 23,600 mark. We are not passing that in a hurry. What's your verdict on the market and the fact that this is going to be expiry week? What kind of moves do you anticipate?
Yeah, I think some bit of traffic makes the market a bit more attractive, and I think it's a good sign that the indices are now getting into a range for itself. So I think we've gone through the last 2 weeks. One of the better rallies which you've seen for the indices, almost a recovery from 21,500, 600 levels towards 23,700 marks, almost like a 2,000 pointer rally for the Nifty and a 4,000 to 5,000 point rally for the Bank Nifty. We were on the verge of breaking past about the 52,000 mark for the Bank Nifty, but I think now with the range setting in, I would probably believe that it's time for the indices to consolidate. Now, in this phase of consolidation, I think that the range for the index, which I would believe should be 23,200 to 50 mark, which should be a strong support. I think any dips towards that support for the Nifty should be taken as a good buying opportunity.
Okay, buying opportunity, buy on dips is the nature of the market, and watch out for that 52,000 level on the Bank Nifty. Naresh, what's your view on the market setup, and what are you anticipating? Is your call to buy on dips, or is it just consolidation which is going to be the nature this week?
So closer to similar view, 23,200, 300 remains a band of support, and that's a buy on dips. And the second strategy is to wait for a breakout above, say, 52,000 on the Bank Nifty. If that happens, we get into a buy on momentum. Same way, 23,600 crosses on, say, the Nifty. We go into a buy on momentum, because what we are seeing is some of the heavyweights are very interesting chart formations. We are seeing a decent enough recovery in ICICI Bank, getting close to an all-time high. You have HDFC Bank holding on, and now only Reliance Industries remains a stock which is yet to get into a trend, but it is very close to the supports of 2850 odd levels. So out here, the view is either buy on dips to 23,200, 300, or in momentum about 23,600.
So that's a view on the index and some of the individual names. But pharma is having a bit of a divergent move today. Cipla, of course, is coming under pressure, down around 2.25%, as those 6 observations have come in for the company for its Goa facility. While on the other hand, Sun Pharma is actually holding up okay with a gain of around 1.8%. We did speak with Vishal Manchanda earlier in the day. He's, of course, a pharma analyst at Systematics. Listen into his take.
Fundamentally, I think the value in the pharma sector lies in innovation. Generics probably is matured now in terms of at least in the developed markets, the generic opportunity is matured. There is a potential of pricing getting favorable in the developed markets, but nothing in sight as of now, because supplies remain intact. Supplies don't move out, and competition is also not moving out in terms of and there is some value in the complex generic space, but not very significant to drive stock prices meaningfully from where they are today. So I think innovation is where we should look for. Like antibiotic innovation is happening in India. Companies like Sun Pharma, they have cash and they have a platform to build innovation. So I think these are themes to watch out in the pharma space. We have a hold on most of the larger names in the space, while we have a buy on Jubilant Pharmova, which is about a 12,000 crore, 11,000 crore market cap company. So we see a turnaround in Jubilant Pharmova. The other names we have a buy on are Krishna Diagnostic and Sasta Sundar Ventures.
Right, okay, that's the take coming in on some of the pharmaceutical names. In fact, Kunal, let's pick up on that. You know, you've always liked the likes of DRL, Sun Pharma, but what about Cipla? What about Natco Pharma?
So Cipla is something which has been range bound in the last 1 month. So no major price trends coming out for the stock in the near-term charts. I think when we look at the recent support, 1460 is a very recent support from where the stock had bounced off at the start of this month of June, moved towards 1580 mark, and I think it's very close to now midpoint of this range. 1500 is where the stock is trading right now, so which means closer to 1460 levels. I think would be a good buying zone for Cipla. On the other hand, when we look at the other pharma stocks, Biocon is something which has actually been one of the stronger names. Around that 300, 320 was a very big congestion breakout for Biocon, a multi-week, multi-month resistance, and now I think at closer to 340 levels, that's a stock which still continues to look attractive. So I think as a fresh play, I would look at Biocon from the entire pharma pack. Currently, looking at the charts on the medium-term basis.
Okay, Biocon is what Kunal is liking from within the pharma pack. But Naresh, what about some of the diagnostic names, Metropolis, etc.? Do they look or make for a better, slightly medium-term bear as opposed to pure play pharma?
So in terms of a technical structure, pure play pharmas have a relatively better chart. We've seen a consolidation for a long period of time for Metropolis as well as Dr. Lal Path Labs. The only concern is they tried to make a 52-week high, but the follow-up momentum was not great. So if you look at Dr. Lal Path Labs, 2800 was the previous high in November of this year, November of previous year. The stock went above that, but did not see any follow-up. Same is the case with the Metropolis. If you look at it, the stock had a top around this 1800 mark, 1800, 1900, broke above it, did not make a major move. So out here, yes, the trend seems to be reversing, but the momentum is not great. At the same time, you can see a better momentum in a lot of mid-cap names in the pharma side, whether it's a Granules or a Natco Pharma. We are seeing good breakouts happen and good follow-up action. So I would prefer pharma as of now.
But today was the first day of the first session of the 18th Lok Sabha as well. Of course, a lot of the fresh Lok Sabha ministers took oath as well. But what's also underway is the planning of the 100th day of the government, plus the entire project financing norms is something that the government is relooking at. In fact, we understand from sources, and this is something my colleague Prakash had actually exclusively filed, that Finance Ministry has submitted comment on the draft project financing norms. Those were the talk of the town, and today, for instance, PFC and REC are reacting to that news flow. Let me take it across to Prakash to get more details on this story. Hi, Prakash.
Yes, we are learning from our sources that the Finance Ministry has submitted comments to the RBI on draft project financing norms. We are given to understand that the Department of Financial Services under Ministry of Finance has sent their suggestions to the RBI after wider consultation. Along with that, the sources are also informing that some public sector banks such as SBI, PNB, IOB and UCO Bank have also submitted their comments. Along with that, some financial institutions like IFCL has also sent their suggestions to the RBI on a draft project financing norms. Along with that, the sources are also informing that the Department of Financial Services has urged RBI to distinguish between public sector and private sector infrastructure projects. In fact, it is in favor of treatment of these projects based on its nature. However, DFS supports RBI's efforts to mitigate the risk factor involved in these infrastructure projects, and it can hold separate meeting with the RBI at later stage. As you are aware that the RBI had issued draft project financing norms which requires to have at least 5% provisioning of total funded amount by lenders, and the stakeholders were supposed to submit their comments by June 15.
Okay, bunch of other names, and Ujjivan Small Finance Bank, of course, has been dunked down from the word go today. They lowered their FY25 guidance marginally, but that's not really something that the street is like, and the stock has pretty much languished from the word go today, still lower by about 5%. There's also the likes of a HAL, which is still holding up, a good 3% of a move coming in there. Jubilant Foodworks, Kunal had highlighted this stock earlier today in the morning. In fact, that stock as well is still buzzing 3.6% higher. Astral is a big volume buzzer today, holding up nearly about 4% of attraction coming in there. 4.5% actually as stand corrected in the cash markets at 23.75. And then Cummins, Voltas, this entire segment of stocks as well is looking pretty strong today. Cummins holding up 4.6%, Voltas as well holding higher by about 2.17% or so. Within the Nifty, of course, it continues to be a Shriram, M&M, the usual suspects that continue to hold out, other than, of course, Sun Pharma too, which is making a dash of about almost 2% today. Kunal, within the cap goods space, you know, your Siemens, ABB, Cummins, Voltas, all put together, where is it that you would execute a fresh long, perhaps?
So I think Cummins is interesting. That's a chart which has given a breakout today above that 4,020 mark. I think 4% up today, 4.5% up, and I think right throughout the day, the stock had shown good momentum. The concern with L&T is that even though the stock has been quite buoyant over the last 2-3 weeks, but somehow the last 2-3 days, the momentum is slipping by for L&T time and again. So I think the stock made a dash towards the 3680, 3700 mark. Just about last week or so, it's come down towards 3500 levels. So which means that the stock is still struggling to get into a breakout kind of a mode as compared to a point where many of the other peers are getting to a breakout. So I would probably believe Cummins at current levels could be attractive. Voltas on the other hand also, I think something which is very attractive. It's holding on to that 1500 levels broadly for the last 1 to 2 weeks. And time and again, I think we've seen the stock getting to a breakout even after those odd phases of sharp correction which comes by. So Voltas is another name to be bullish on.
Okay, Cummins, Voltas, those are Kunal's top ideas from within cap goods. We're going to take a very quick break on that note. When we come back, we'll have our fundamental expert as well join in on the show. Closing trades right here on ET Now, still just about mildly in the green actually. So we've covered ground from where we started off and we've made it back to 23,504. But it doesn't seem like we're out of the woods because once again we're cooling off. Cipla, of course, because of news flow, that stock is down about 2.5%. But key heavies like Axis, Infosys, Reliance, IndusInd Bank, L&T, they're weighing heavy on the index today. Jigar Mistry joins in on the show right now to talk about what he's making of the fundamentals of the market. Jigar, hi, good to have you on the show. Just wanted to understand what's the market prognosis now from now up until the budget after having done what we did post the election verdict. Do you think it's now time for some consolidation?
Hi, Aisha. Yes, thank you as always for inviting me to your show. I think yes, some consolidation is the need for the hour, right? So starting October 23, I would say we have had sort of a one-way rally, and seminal events have not really had sort of any impact whatsoever, irrespective of how bad versus the expectation they have been, right? So I'm not just talking about the election results, but even when you look at how Fed was expected to pivot sooner than expected. And basically, from November onwards until January, we had 7 rate cut expectations priced in. But after that, all of that has reversed. And even within the Indian political scene, things have not worked out as the markets were expecting. And despite all of that, we are talking about all-time highs. Stocks, almost 630 odd stocks have more than doubled in pricing over the past 13 months or so. And 80% of them have been small and mid caps, small caps rather, just small caps. So essentially, we have had a great run. Time is now to sort of take stock, understand what sort of numbers actually hold out, and take it up from there.
Okay, time to take stock of your investments. But since you are talking about a bit of a churn and the fact that you have to relook at your portfolio, where would you put incremental money to work? Would it be the similar ideas that used to do well, your capital goods, etc.? Or is there a change completely that you're looking at undervalued sector, the likes of, let's say, private banks, consumption, etc.?
Right, Anisha. So I think, gross fixed capital formation to GDP You've spoken on this on your show before about this, that 2012 onwards, we have had a downward trending sort of uh, trajectory of the GFCF to GDP. And that started moving up since 2021. And now all the four sort of underlying, so central government spending, state government spending, real estate and housing, and private corporation spendings are on its way up. If this plays out for the next few years, then clearly you have one sort of big mega theme playing out, and people have chosen to play it in several ways. So obviously it started with the OEs. So capital goods index is among the best performing index over the past 3 years. Then you take a step back and go to the execution businesses, so EPC businesses. Then you take a step back and look at consumables, so cement, pipes, cables, all of them have done well. And then you take a step back further and look at all the housing finance companies that have done well. And I think time now is to look at a lot of the corporate facing banks and related entities to do well. So I think valuations on some of these businesses are now pricing in a lot. Private banks, I would say, are not among those. So that continues to be a very interesting play of things.
Okay, point taken. So that's the view coming in on the entire setup right now. But overall, what's the view on the small caps? As we're talking about that, it seems like there's certain pockets which have become overvalued. In that case, is it just fair for people to probably book out and put money and redeploy it into only large caps? Or what's the way to go about your mid cap and small cap positioning right now?
Right, Anisha. So look, I'll give you a few numbers here. So in March 2019, if you look at what retail directly owns in their name, you look at each and every company and multiply it with the market cap. Then in March 2019, the value of their holdings stood at about 22 trillion INR, 22 lakh crores. In COVID, March 2020 quarter, that number came down to 8 lakh crores, right? And since then, if I look at the same number in June 2024, that number has gone up to a whopping 60 lakh crores, right? So retail in their own name, forget mutual funds, forget PMSs, in their own direct account have generated a wealth of over 50 lakh crores in under 4 years. And we have only about 15 odd crores sort of demat account holders, right? So compare this to, say, the household savings entirely in India is only about 14 lakh crores, and majority of that goes to banks and deposits, and we have 300 crore sort of bank accounts. Compare that to the wealth that has been made in the equity markets, and majority of this has been made in the small and micro cap. By micro, I mean company number 501 in the list of market caps and above. And those businesses have gone up 16 times. Small cap has gone up close to 9 times. Large cap has gone up 3.5 times. I think retail is taking solace from the behavior that every fall thus far has been an opportunity to buy. And the same behavior is repeated time and again. Mutual funds, if you look at the small cap number of folios, that's gone up 4x in under 3 years. We have now more small cap folios than mid cap or large cap number of folios, right? So it's been a great run so far. But when you do a reverse DCF on many of these businesses, we are now accounting for huge expectations and which may be difficult for many of these companies to meet. So our fund was about 63% invested in small and mid caps by March 2023. So last year, we have brought that down to closer to 50% now. And if the rally continues, we'll bring it down further to about 30 odd percent.
Right. Jigar, market cap distinction aside, where is it that you still find value on the table and would have, put fresh money to work? Any theme or any sector?
Right, Aisha. So I think private banks is one theme which we are clearly interested in. The second, within the NBFC pack, I think housing finance companies is where we continue to have a reasonably large ownership. Thirdly, automobile and auto ancillaries is a place where there is still some amount of value that's left. Fourth, pharmaceuticals, excluding the sort of pure generic space, is something that we have a reasonably large exposure to. And largely, as I said, the consumable side of the GFCF story, so cement, sort of cables and all those businesses is where we have exposure to.
Okay, Jigar, good to have you on the show. Thanks as always for taking the time out. Okay, we're going to take a very quick break on that note. But amid the Deutsche Bank's CSR event and collaborating with Masoom on initiatives for the LGBTQIA plus community, we caught up with the CEO, Kaushik Shaparia, on the bank's financial ambition.
We are just in the midst of trying to put together our thoughts on how we should look at India, which is resurgent now in a way much more than was ever expected. And this time, I think India is going to really take a front and center space. Deutsche Bank is very thrilled. Our customers around the world, where we meet all the time, are always asking more about India than anything else. I have a responsibility for India and emerging Asia, but whenever I go and meet customers, there's more question about India than other parts of Asia. So India is front and center of global companies wanting to invest around the world. And Deutsche Bank is quite keen to have more than a fair share with our ability to connect the world and connect both investors as well as both financial as well as portfolio investors.
Just last question. How are you trying to keep the NIMs at your base? As in, what is your strategy of keeping NIMs very...
NIM? Well, I think NIM has got a lot to do with the market forces which are there. So it's not something which we can manage solely on our own because we live in a competitive world. There are times when the sector will have slightly higher NIMs. There are times when they'll have lower NIMs. But one thing which we would like to do is that not have a quest for NIM, but more interested in NIM on a risk-adjusted basis. So we want to have the right risk and get the market NIM for that, and obviously improve our cross-sell with other items which are non-NIM too, to ensure that we have a holistic wallet of the customer.
Welcome back. Well, a lot of big buzzes, even though the small cap index has actually moved in the red. There are individual names like Route Mobile, which is up 15.5%. Remember, the company has enabled the WhatsApp-based ticketing for Nagpur, Pune, Hyderabad and Delhi Metro, becoming the largest enabler for such services in the country. And that's the reason that stock is high by almost 15%. Not just that, Garden Reach is also reacting to the order inflow that the company has bagged. A lot of holding companies, the likes of Bajaj Holdings, Bombay Burma, etc. are in focus. There's also an up move on the likes of MRPL. JK Paper is of course reacting to the news flow of the GST simplification on the corrugated boxes, as well as Century Textiles on account of the news flow of one of the fresh properties that they've added. All of this is having an impact on these individual stock names. What's coming under pressure is clearly your chemicals and fertilizer space. A lot was expected ahead of the GST meeting, didn't really come about with respect to the rate rationalization, and that's the reason FACT, RCF are down in the trading session. But talking about a few more volume buzzers, let me take it across to Ansh to get that list. Ansh, tell us which are the stocks on your list today?
Right, so Astral will be the first stock in focus, as the stock has given a good breakout from its cup and handle chart pattern. In addition to that, the stock has also touched record high level with good volumes of over 3 times its average trading volume of last 10 sessions. Apart from this, Jubilant Foodworks will also be in focus, as the stock has given a breakout from its upward sloping resistance trend line, which has been intact for last 2 months, and the stock has also touched 5-month high with good volumes of over 2 times its average trading volume of last 10 sessions. Lastly, Cummins India will be in focus, as the stock has given a good breakout from its reverse head and shoulder chart pattern, which was intact from last 1 month, and today the stock has given a good decisive breakout from this pattern. So these were the breakout stocks based on price volume action. Now we have FNO monthly expiry on Thursday for stocks, and before that we are seeing high rollover in Industar, India Cement and Steel Authority, whereas a low rollover for Glenmark Pharma, Elcom Lab and Dabur. Also, there are high chances of a Steel Authority, India Cement, Punjab National Bank, GMI Import, LIC Housing and IRCTC to get into ban list for tomorrow. So keep an eye on these stocks.
So ban potential, GMR Infra as well, part of that list. But let's just move on and let's talk about the expiry as well. Kunal, what's it looking like? You think we could close in with a downward bias?
On the monthly expiry,
Yeah.
I don't believe that we should be closing the downward move for the indices. I think we should hold on to that 23,500 mark as a pivot for the Nifty, and I think that's generally what happens for the indices on an expiry week. We generally close closer to that round figure mark, unless momentum months like what we saw last month, where we saw the index breaking past about the strong psychological barrier of 23,000 and then closing about those levels. So I think this time around, I would probably believe 23,500 could probably broadly be a point where the markets consolidate as well as expire. We also look at this in the options segment, because that generally or the positioning into those segments generally gives us a sense of how the option positioning as well as the markets are viewing the indices trend. And that also indicates that 23,000 as well as 24,000, these are the two round strikes where there's been huge amount of put writing as well as call writing respectively, and that generally indicates that maybe we could close into the midpoint of this 1,000-point range for the index.
Okay, that's that on the index. It seems like we'll manage to hold on to that 23,500 level. Today, of course, it's M&M once again, which continues its climb up higher. 2906 thereabouts is where that stock is. And then Shriram as well. If we can just bring up the 1-month chart for Shriram, that's done very well off late. That, of course, is the today move, but the 1-month chart will, I think, give you the bigger move. A 20% traction is what the stock has seen in just the last 1 month alone. Naresh, this is really, of course, a new entrant into the index, but it hasn't really been a very high beta, stock name for that matter. What do you read after this 20% move that the stock has already clocked in the past month?
So the trend is still strong. It's just that it has a lot of volatility, and we've seen that happen when the inclusion also happened. So at current levels, the risk reward is not good. So I would wait out for some more time, let it consolidate here. Any retest back to 2600, 2650 would be a buy. At current levels, the stock has already done quite a bit. So closer to 3000 is where one would expect a lot of resistance, and a target price should be done in the short term. So look to book profits around 3000 odd levels rather than buy here.
Point taken. A lot of other stocks in news. For instance, TBO Tech, which is a company where Goldman Sachs actually initiated coverage. They see quite a bit of upside on that stock, so we'll track that one as well. It's petered off a bit, but nonetheless holding on to a 7% gain. But in terms of the other individual movers, you also have Century Textiles, which is doing quite well. Brigade Enterprises in the last few minutes has inched higher, and then Prestige State, that 5,000 crore QIP is definitely giving a leg up to that stock. Within this entire basket of real estate, Naresh, which are the stocks that you would recommend to buy, and which are the ones that one should book profits out of?
So as of now, it's a ride on existing names, but something like Brigade and Prestige have already moved up quite a bit. So there one could look to trim. The top names continue to be in the large cap category. DLF, which has gone sideways, consolidated well enough around that 800 to 880 mark. So that still looks okay once it crosses 900. On the small cap side, something like a Suntech Realty, which has already moved up, but on dips still is a good chart, because that's a breakout of almost 5-6 years. So any dips back to 550, 580 would be a buy. A contra bet would be Kolte Patil, which has gone nowhere for the last almost 8 to 10 months relative to rest of the real estate pack. So it's very similar to what was happening with Suntech around 450 odd levels, which has spiked up now to 600. So at current levels, the best risk reward is in Kolte Patil in the mid cap, small cap segment.
Right, let's welcome on board Gurmeet Chadha as well and find out what he's making of the market. Gurmeet, first tell us, is there any respite from the heat wave in Delhi? Is it a little bit better at least?
Yeah, it's a bit better. It actually rained Sunday as well as Friday, but still upwards of 40 degrees peak hours, but much better than 47, 48 degrees. Yeah.
Relatively better, let's use that terminology, but relatively better for the market as well. I mean, while it's been a week of consolidation that we've come out of, but we managed to do okay at an index level, individual stock level as well. Banks come back to the fore. What's it looking like for the next 1 month or so?
Yeah, so I think the market is trying to position itself basically, pre-budget. And I think they are trying to, so I think the housing finance names have gone up. There's an expectation that the government would, put more incentives in place for rural and semi-urban housing. I think the agri-focused names are back in focus, considering that the MSP jump has been quite significant in most crops. Almost 14 crops, there's been a 40-50% upward revision in the MSP, which are the Kharif crops. Also, there's some bit of focus on consumption, with some respite expected for the middle class, and I hope it goes through in terms of taxation. So I think the market is trying to position that. But to be honest, I think there are very few pockets which give you a lot of valuation comfort. So you got to be very selective in terms of what you buy, and ensure you don't end up paying very unreasonable valuations in those pockets.
Point taken. But talking about the expectations, I think a lot is expected from the government, and the 100-day agenda is something all the ministries have been working on. Let's take it across to my colleague Sameer, who's joining in to talk to us about what is in store for the roads ministry and what are they planning for the initial 100-day. Sameer, over to you.
So the Road Transport Ministry has prepared a 30-point agenda which they are looking to implement within the 100 days. And what we are picking up from our sources that within 100 days, the Road Transport Ministry is likely to award the road construction or the highway construction of more than 3,000 kilometers. Also targeting to lay or construct 1,000 plus highway or the road construction that is there within 100 days. In addition to this, the cashless treatment of the roadside accident victims is there in the topmost priority of the government. So in highways, it has been witnessed that the road accident victims, they are not being properly taken care of, and especially when it comes to the treatment at the hospital. So cashless treatment, it is at the topmost priority. So a framework is likely to be formed and to be implemented within 100 days. In addition to this, the wayside amenities or the highway side amenities is also in the priority agenda of the ministry. So the Greenfield Expressway, at every 50 kilometer, there will be wayside amenities, that is to provide the refreshment area, the retiring rooms, and these all sort of facilities will be provided to the travelers. Also, we are picking up from our sources that the third-party insurance is going to be mandatory for all. It has been reported in multiple cases where in case of accident, some of the vehicles were not having the third-party insurance. So the government is looking to come up with the third-party insurance mandatory for all. So some sort of steps will be taken in the same direction. Also, to improve the road design and road safety, MOUs will be done with IITs going forward, and they will come up with the better road design, and that will help to make road much safer for the travelers. Also, to boost the electric mobility, the government is likely to go ahead to inaugurate the first expressway or the first electric expressway, which is Delhi-Jaipur Expressway. So this will give a much needed boost to the electric manufacturers in the country. Also, the Delhi-Mumbai Expressway, the Greenfield Expressway, largely it has been completed, and in many patches the the movement has already been started, but the entire stretch is likely to be inaugurated within 100 days. So these are a couple of important points that we can see in the 100-day agenda of Road Transport Ministry and getting it implemented as well.
So much for bringing us those details, but let me take it across to you, Gurmeet. What do you think of the infrastructure companies? So whether it was over the weekend when there was a bit of a GST fillip for some of the highway developers, or this 100-day agenda, or the fact that the government has been giving this push towards infrastructure development, in view of all of this and the kind of order books these companies have, would you make a fresh bet in any of the infra names? And if yes, which are those names?
So we are a little selective in infra names, largely because of past record on governance and the inability to manage the commodity prices and the working capital cycle. So we are selective. We continue to be with the bellwethers, names like L&Ts of the world. A subset of that is logistics, which I think is not well represented in the index, and I think that that could see a lot of traction. So we have Concor, we have Gateway, we have some of the names in logistics in our radar. We have a very specialized name which is related to auto logistics, which is TVS Supply Chain Solutions. They came up with an IPO after a very long time, and they've guided for almost 300-400 crore PAT over the next 2-3 years. Currently at about 7,000 crore market cap. So we like this name. It's a specialized niche auto logistics name which we like. And so we are playing at that. But as I said, in some cases, because of the order book, just because of the government policies, the prices have run up quite significantly. And a lot of these EPC names are at 30, 40, 50 times EV by EBITDA. Last time this happened was 2003 to 7. And we all know what happened in subsequent 5-10 years. The returns were very subdued.
Okay, the other talking point in the market today is also holdcos or holding companies which are witnessing some splendid moves on the back of that SEBI circular on special call auctions aimed at achieving a fair price discovery. What does this really mean? Let me take it across to Sharad to break it down for us.
Well, it's an interesting set of companies that are buzzing in trade today, and these are the holding companies which are buzzing, especially such as Pilani Investment, JSW Investing, BBTC, Kama Holdings, Rane Holdings, and even Maharashtra Scooter. Now, what's the important buzz that why these holding companies are rallying in the day's trade? Last week itself, SEBI came out with an important circular on June 20th, and that was for the holding companies. Now, SEBI has stated that they have introduced special call auctions with no price bands coming in for the price discovery of investment holding or the investment companies. Now, they typically trade at a higher discount levels as compared to their other companies, and also to the intrinsic book value which is there in their financial numbers. Now, the SEBI's new framework is here to address this gap itself, and the holding companies largely, as per our internal numbers which we check, they are coming at a discount of 60 to 85% over their other group companies. Now, why this is being done by SEBI? There are two important reasons. The first one being a fair price discovery coming in, since there is no proper actual business in a holding company, but rather than that, it's treated as an investment to the other group companies, and also to increase the liquidity in certain illiquid counters and to increase the retail interest as well. And because of that, there is a price discovery happening, and today itself call auctions actually took place, and because of that we could see some action in the holding companies as well. And if you see on the screen itself, BF Investment, BBTC, Kama Holdings, and in a lackluster market today, a lot of holding companies are coming in at top numbers in the green space.
Okay, Sharad, thank you so much for that. But Gurmeet, what's your view on the holding companies? They've obviously always traded at a discount. But do you think with all of these circulars and all of these issues coming up, there would be that narrowing of that discount and a better price discovery?
Oh, 100%. And I think it's an interesting development, as Sharad pointed out. So we are also trying to evaluate. We have one company in our universe. This is Bajaj Holdings, where we think there could be some value unlocking. The holding discount excess of 50% in some of those cases. So we have some of those names in our name. We had one TVS Holdings, which we made good money, but that was a special situation because the company got split into three, which was Sundaram Clayton, TVS Holding, and the preference share. And it panned out beautifully for us for last 1 year. So we currently have exposure just to TVS Holdings and Bajaj Holdings. We'll study this in great detail and figure out if we can add more and look at something like Maharashtra Scooters also, even something like ITC for that matter.
Scooters, ITC, but this is something which will need a bit more of understanding because you'll have to see how it really progresses from here on. But talking about the technicals of some of these companies, Naresh, on the likes of Kalyani Investment, Bombay Burma, Zuari, Godrej Industries, Bajaj Holdings, as Gurmeet was pointing out, is there any name that you would recommend from a chart point of view? I understand the volumes are usually on the lower side, but anything that you would want to make a bet on? Naresh, the question is for you.
Yeah, so the only company which still looks decent is KDDL, which is holding company for Ethos. And that's a chart which is setting up for a breakout eventually if it sustains 2850, 2900. And that has not seen a spike similar to what has happened with the rest of the holding names. So still looks promising. The other names like, say, Bombay Burma could be interesting on dips going forward. There I have a positive bias given that it owns a large chunk and it is still at 89% discount up till yesterday. So that's the maximum discount we had in terms of the holding discount. So on dips, only Bombay Burma would make sense, not at current levels.
Taken. So that's about the holding companies, both the fundamental and the technical view. But the other space which is actually doing quite well is the Alcobev industry. Now, United Spirits will come up for you on the screen, and that stock has managed to inch up by almost 3%. Remember, this is a news flow that we told you that Karnataka state government has notified fresh slabs for calculating additional excise duty. It has reduced the total number of slabs from 18 to 16, and the industry experts and analysts believe that this might result in an indirect net increase in the prices, which could be to the tune of 12 to 13%. United Spirits, Radico Khaitan, these are some of the companies that stand to benefit, and that's the reason some of these companies are actually inching higher. But Gurmeet, this is one space which has now been getting a lot of policy tailwinds as well, and with that entire premiumization wave and the fact that we were just speaking with the management of Allied breweries as well, that comes out with its IPO tomorrow, seems like that this entire space is also seeing a lot of traction from investors and the users alike.
No, I think the traction for the users was always there. I think it's basically the investors, because of as you rightly said, the policy uncertainty. So I think United Spirits is worth the look post the management change. Another one is United Breweries. I think Vivek has joined from PNG Australia. So they have a great leadership team, board as well. And I think he was supposed to join PNG Global, but had to come to India due to personal requirements, and then has not taken over United Breweries. So, and I'm a great believer once a good leader comes in, especially in the consumer-facing industry, it creates a lot of difference. We've seen that with so many names, including let's say Tata Consumer, Varun Beverage. So I think that's something we are tracking. And that's something where probably in United Breweries, probably the policy uncertainty would be, in terms of relative impact, could be slightly lesser.
Okay, point taken. In the meantime, let me take the technical view as well. Kunal, on some of these names, Radico Khaitan, Home Distilleries, of course, came under scanner because of those labor issues. But what's the view on some of these names?
Yeah, I think Radico is something which is starting to look very attractive, and I think at 1800, 1820 mark, that's a stock which is confirming a fresh breakout for itself, and that too I think at a point where the stock had gone through a major time-wise consolidation. So the last time the stock had seen this level of 1800 approximately was in November 2023, and I think from there the stock had gone through almost a 9-month kind of a consolidation. So this could be a very strong breakout potential candidate from here on. And this is almost looks like a 200, 220 point of breakout for Radico. So would suggest a buy at current levels with a potential target of even 2000 plus with a time frame of 1 to 3 months.
Okay, so almost a 15-20% upside on this one. Keep this one on your radar. But let me also, talk about the view coming in from Madhu Kela on the Alcobev industry. Listen into what he had to say on the matter.
There is no reason why liquor industry will not be as vibrant in India as it is there in China. We have more people as compared with China now, younger population, who will look to consume liquor once our per capita income increases. We have seen in lot of other sectors, in lot of other places that this liquor consumption has increased, and hence there has been birth of many valuable companies. I've been investor in Radico for a long time. You have seen what a fabulous journey this company has had in last 17-18 years. They were selling whiskey at 500 rupees a bottle. Now they sold, the same company has sold a whiskey at 5 lakh rupees a bottle. Right? They sold 400 cases few months back at 5 lakh rupees a bottle. And the brand is globally recognized now. If you are able to build a brand, then you make serious money in this sector, and that is what is being proven by Pernod Ricard, by Diageo worldwide. If you look at their brand, they are selling one bottle of 750 grams at 25,000, 30,000, 40,000 rupees.
Okay, so that was about the Alcobev industry, but let me take it across to our technical experts to quickly get some BTSC trades. Nuresh, what's the buy today, sell tomorrow idea?
So first is a buy on Naukri Info Edge. The stock has broken out into a new 52-week high, good momentum. Stop loss at 6,500, target price of 6,700. Second is a buy on Grasim Industries, close to a new all-time high here. Stop loss at 2,480, target price of 2,570.
Okay, Kunal, what's on your list?
So BEL is something which is starting to look attractive, Bharat Electronics. So that's a chart which I think at 307.8 levels would look out for a buy closer to a target of 324, which should take the stock back towards its previous major highs, stop loss at 303. And Ashok Leyland is also something which has made a very strong comeback. In fact, auto stocks have been a lot more resilient today. So would pick Ashok Leyland at current levels, buy with a target of 250, stop loss at 233.
Okay, so these are the top recommendations coming in from our technical experts. But Gurmeet, the other space today which is coming under pressure is, your small finance bank, your micro lenders, MFI plays, etc. Call it the kind of commentary coming in from Ujjivan, or the fact that this entire chatter around loan waiver has started again. How should one approach this segment? Is this dip a buying opportunity, or is this the time to take some profits off the table?
No, I think the sector would come under pressure, especially after the Ujjivan commentary and lowering the guidance. But I think there will be differentiation, and there's somebody like, for example, a Credit Access Grameen, which is amongst the largest in this space. I think it's done phenomenally well over periods. We haven't they have understood various stress tests, including the COVID ones, and I think even the regulator has been very proactive in identifying stress in unsecured loans in different pockets of lending, and we have seen regulatory action. So I think management proactively doing more provisioning is actually positive in my view for the sector, from the health of the sector from the long term. And we should not probably try and color everything in the same brush. But as I said, relatively right now, the home finance companies make more sense with the focus government has. Even some of the niche NBFCs names like Ugro, which are again focused more on MSME lending, they maintain credit costs. The yield band is more 14 to 18% and not 30-40%, which where MFIs operate. And also some NBFCs which have been a little out of favor, like Bajaj Finance, like Cholas of the world, and even now Shriram and L&T Finance. So I think some of the NBFCs will make a comeback as cost of funds, in my view, will come off over a period of time. It will be slow and gradual, but as cost of funds come off, I think some of the NBFCs will get back in focus.
Point taken. So those are some of the recommendations from the MFI space and how you should approach it. But definitely watch out for all of those, external circumstances which have been impacting the sector or which are expected to impact the sector further. For the overall market, there is a bit of a pickup. So we are nearing the mark of 23,550, but just about that level. But time now to take it across to Sharad to get a sense as to what the dealing room chatter has been like today. Sharad?
Well, yes, in focus is Jyoti CNC, and the khabar on the street is that a block deal is likely to take place and roughly 1.5 to 2% stake would be there on offer. Block deal size expected to be ranging between 400 and 450 crore rupees, and the seller is likely from the pre-IPO segment in the HNI space. Now, interestingly, the company listed in the month of January 16th itself, and after the 6 months period of the lock-in period, which ended last 2 weeks ago on June 16 as well, and the buzz in the street is that the stock has given very handsome returns in the street, so we might be looking at some blocks coming in from the HNI segment. Interestingly, the IPO price of the company stood at 331 rupees per share, and from that price till now, this has given investors returns between 3.5 to 4 times. So we can see some selling pressure happening in the day's trade as well. And the cover on the street is that a block deal is likely to take place from the HNI segment, but invested in the pre-IPO stage.
For that, we'll watch out for Jyoti CNC and any big trade there. But before I let you go, Gurmeet, the last word with respect to any new trades that you might have initiated on the long side or on the buy side, or any other places and pockets where you have booked the profits out of or taken a bit of a churn in your portfolio?
Yes, we have. We've rebalanced some of the defense names where the stocks had run up 3-4 times. They became more than double digit in the portfolio. So we're just trying to rebalance a little bit to avoid concentration. It's not that we are negative, but just as I said, some of the stocks became 12-14%. We bought at 4-5% portfolio weight. We are trying to add some, as I said, some recycling, clean environment themes. I think it's a genuine need. We have added Gravita, which is into lead recycling. We've added Ganesha, I discussed with you almost a month back, which is into recycled plastics and recycled material used even in textiles. There's a lot of capex happening in that space, and there is government regulation coming, and it imposes a heavy fine starting 2025 of almost 5 rupees kg in plastic case. And then we are also looking at some names in data centers and surveillance. Because that's something that could be the next leg of growth, and there are very few names, in this space, so you get a bit of premium with very few listed players in that space. So that's what we are trying to add in the portfolio.
Okay, so some of those interesting ideas, data centers, a theme that a lot of people are talking about now, and Gravita is the interesting one. In fact, we did speak with the management of Gravita earlier in the day, and they sounded fairly positive about their growth prospects, and that's something which, of course, Gurmeet is also banking on. On that note, Gurmeet, we let you go. Thanks so much for making time and speaking with us. But before I let my technical experts go, Naresh, a last word as to overall positioning of the market is concerned. Would you carry the long positions over to tomorrow, or what's the best tactical trade right now?
So carry the positions over for tomorrow and wait for, say, 23,600 to cross to add more. So as of now, the view is positive, looking to add more on the way up.
Kunal, your view?
Well, I would definitely carry positions, and in fact, for a few of the pockets on the larger cap names, what we've seen today for the auto stocks, etc., I think we would also recommend, in fact, adding positions into these particular pockets, which were underperforming previously, but I think now they've come back into a good risk reward play.
Okay, so both our experts suggest that perhaps the market setup look like that you can carry forward the long position, because overall it's been a steady day. We started on the back foot, but from there we have definitely gained ground, and as we are closer to the end of the trading session, 23,550.
If you like this video, then like, share and subscribe to ET Now.